Hello and welcome to Business Incorporated. I'm Ladi Williams. Coming up on the show today, AFDB to launch African Economic Outlook 2021 today, and French Development Agency to invest 2 billion euros in Nigeria. South Africa ranked top food-secure country in sub-Saharan Africa. Let's get the show started with intraday market numbers, which were in the negative territory. South Africa's main index shaved off 1.34%, while the NSE sustained Thursday's negative sentiment and declined 0.20%. The market in Egypt closed for the week positive on Thursday by 0.23%. And markets in the Middle East ended the week mixed. On Thursday in the UAE, Dubai's main index rose most by 1.03%, while Abu Dhabi's index rose 0.54%. Elsewhere in the region, the Qatari index declined 0.46%, while Saudi Arabia's index was lower by 0.08%. And European markets retreated slightly today, but are still on course for a positive week as a rise in Treasury yields resurface some investor caution. Let's talk now to Chelsea for developments in Europe. Hello, Chelsea. Great to have you. Europe's vaccine plans are once again in danger after AstraZeneca said it will deliver far fewer doses to the EU while countries halt use of the vaccine after a death in Denmark. What does this mean for Europe?
Well, as you say, it's another major blow for Europe. We've seen AstraZeneca already reduce its planned shipments to the EU quite dramatically. Initially, they had planned to deliver about 100 million doses to the EU in the first quarter. Now they're only projecting at most 30 million. They've also reduced their forecast for the coming quarter. So really for the next several months, we're likely to see a continued shortfall of vaccines here. And the news over the past 24 hours about several countries across Europe, including Denmark, Norway, Romania, now suspending use of the AstraZeneca vaccine is only adding pain to this very slow and difficult rollout. We saw yesterday that Denmark was the first country to suspend use of this vaccine after somebody died after receiving it from blood clots. A lot of health experts are warning from reading too much into this yet because it's not clear and there's really no evidence that the person died as a result of the vaccine. But there is already a lot of skepticism over the safety of the AstraZeneca vaccine. So that just means that more people are likely going to be looking at this vaccine skeptically. And it means that the EU is going to continue to struggle to get the population vaccinated.
All right, we'll keep tracking that. The European Commission has also approved a new vaccine from drug maker Johnson & Johnson. Will this improve the situation?
It will, but it will take time. Johnson & Johnson's shot has been looked at with a lot of hope here in Europe because it's one of the easiest to get to people. It's one of the easiest to distribute. It only takes one shot instead of two, like a lot of other vaccines as well. In terms of storing it, it's much easier. So once the Johnson & Johnson vaccine gets into circulation, it's likely to really help things along here. But the big problem remains the shortage of vaccines that we're seeing for every major drug maker right now. Johnson & Johnson isn't expected to start delivering these vaccines for at least a couple more weeks. The health minister here in Germany says we don't expect to see any shipments until the middle, perhaps end of April. So it will help, but only after those shipments begin, which could be several weeks or months.
All right, let's talk about the markets now. The DAX in Frankfurt has been trading at record highs all week. What is driving the market at this moment?
Well, yeah, it's been a very volatile week for stock markets around the world. We've seen record highs, we've seen big sell-offs, and there's a lot of crosswinds in markets right now. Really, the main driver is of course, the economic outlook. We've seen over the past couple of weeks a lot of fears over inflation, over rising bond yields. Yesterday, the European Central Bank did say that they're very committed to making sure that bond yields, so borrowing costs, don't rise a lot, because that would mean it's getting more expensive for governments, for companies, and for households to borrow money. That's not what they want to see right now, because easy credit, cheap credit is really what's fueling the economy. So that did give investors a bit of hope that the ECB is still committed and is really ready to act so that that the economy can continue to grow. But the other big thing in focus remains the U.S. situation. Economic growth in the U.S. is expected to really shoot forward after Joe Biden managed to get this $1.9 trillion stimulus package. That means that the Eurozone is going to be falling even further behind the U.S. in terms of the economic recovery.
All right, Chelsea, thanks for the update and enjoy the weekend. And in the UK, the topic of discussion is the GDP numbers and, of course, the trade data. Let's see how these are playing out at Intraday with Juliana. Hello, Juliana. Great to have you. The GDP numbers came in this morning, not looking good. And Chancellor Rishi Sunak says the 2.9% drop in UK GDP in January shows the economic impact of COVID-19. How are the markets reacting to this data, including the trade data?
Absolutely. Good afternoon, Laddie. Well, the FTSE started off in the red. It looks set to go into the weekend on the red too. I think traders are a little bit cautious after that gloomy but expected terrible GDP figures. It came in at minus 2.9% in January. This is after it rose by 1.2% in December. A couple of things, really. Not all COVID related. It's also down to Brexit. Prime Minister Boris Johnson rushed through that last minute Brexit deal on Christmas Eve. That has massively affected importing and exporting. Importing to the EU and out of the EU is costing billions. It's contracted by billions of pounds, most notably between the UK and Germany. Also, as well, we're seeing that the services, which is what's really weighed heavily on these abysmal GDP figures, are massively affected. We know the hospitality sector is closed. We're not getting that face-to-face that Britain is so used to and so heavily relies upon. Bank of England, the Office for Budget Responsibility, and this Tory government are hoping that once the restrictions do start beginning to lift, and they did start lifting on Monday, we will start seeing the economy tick again. And so at intraday, the all-share is down 0.31%. The FTSE 100 is down also by 0.30%, and the FTSE 250 also down by 0.44%. In the currencies market, the British pound is down against the US dollar by 0.49%, up against the euro by 0.08%, and up against the Japanese yen by 0.02% at intraday.
All right, let's talk football now. Manchester United co-chairman Avram Glazer has put shares worth more than £70 million up for sale. What are you hearing about this, and are you a Manchester United fan?
I've got to say, I did laugh when I saw this, Laddie. Let's just say I do favour Manchester United, though I don't think I've watched a match since Eric Cantona was up front. But yeah, you know, the Avram family, pretty controversial. I definitely know that. A lot of Manchester United supporters not happy with them. They've been protesting throughout the years since they took over in 2005. And that's because they say the poor performance, if there's been a poor performance for Manchester United, I'm not so sure, over the past few years is because the family keep taking money out. Apparently £1 billion worth of dividends has been taken out since they took over the club. And now they've put these shares on the New York Stock Exchange listed under the term Man U, just in case any supporters want to buy a share. And this money is going to be going straight into their pockets. It's not going to be going into the Red Devils pot. And I think this is probably where the anger is going to come from. There's some numbers here. Over the past 12 months, they've lost over £100 million. This is Manchester United. Matchday income has fallen by 94.2%, and debt has risen 164% to £445 million. So clearly a very lucrative club, but they're in lots of debt, and not many people are going to be happy that these shares, well, the money from these shares, are going to go into the back pocket of the Avram family.
Can imagine. Well, it's the last day for this business week. What's on the radar for next week?
Next week, one thing only, is the Bank of England Monetary Policy Committee gathering. They are going to be discussing interest rates and quantitative easing. Quantitative easing currently stands at £845 billion. That's a lot of money. We're not expecting that to rise at all. And then, of course, we've got the interest rate decision. Interest rates here in the UK are at the 0.1%. This is the lowest on record. That's expected to stay the same. And we're going to have a look at public net sector borrowing. And I believe in February, the forecast is that it's going to rise to about £16.5 billion. And of course, this is after the Chancellor just splashed out £65 billion extra in COVID support spending, Laddie.
All right, we'll track that for next week. Thank you for the update and do enjoy your weekend.
You too.
Ghana's Minister of Parliamentary Affairs, Osei Kai Mensah Bonsu, is expected to read the government's financial policy statement for the year today. Let's get a sense on what Ghanaians are expecting to hear and see. Alabi John Kennedy joins us to talk more about this. Hello, Alabi. Great to have you.
Hello. Good afternoon. Thanks for having me.
Good afternoon. So what are you expecting to hear from the budget presentation, and what areas are you expecting the government to prioritize?
Okay, basically, we have been expecting this, and we think this will propel the economy going forward. We want the government and the government machinery to be very, very candid and unequivocal with the citizenry. They have to come out bluntly and let us know. They have to be sincere and let us know that we are in a very, very, very tight situation. Things will not be things will not be easy this year, and this will be very, very serious. So they should find ways and means to let us know how things would be. Basically, what we are looking at is that they should let us know the strategic goal and plan they have for the economy. It won't be different from what we have in previous years. It's not something that we are expecting something extraordinary. At least there should be a clear guideline on how to move the economy forward in the next 10 months. That things can change and everybody can be happy in the country.
And Ghana plans to start a roadshow next week to raise $5 billion from the international capital markets. Do you have any idea what the government plans to spend this money on?
Well, Ghana is already indebted. The debt to the GDP is about 7.4%. And the deficit is around 11.4% as well. So basically, one of the major reasons why they are going on the roadshow is to try and close the deficit gap from 11%, 11.4% to 8%, and to manage the liabilities of the government. Now, when I say manage liabilities, they want to make sure they pay the Euro bond and all other local domestic debt that the government has procured. So basically, that's the main reason why they're actually going for a roadshow. And actually, we have 5 international companies leading the roadshow. We have the Bank of America, we have Citi Group, and we have 3 others, international companies leading the roadshow. And it's going to be done virtually. This is the first time where Ghana will be doing a roadshow virtually, and we hope to bring about the results we are hoping for. And basically, it's a bit worrying, because when this loan comes in, it will be a bit tight and challenging. That's why I said the government should let us know the real roadmap for economic recovery, because 2021 will be tight and very, very difficult. Lastly, I'm sure they are also looking at purchasing more vaccine. And this vaccine, we need it. If the economy is not rid of the COVID-19, it's very, very difficult to actually turn around the economy, because we still have the virus in the economy. So basically, I think these are the things we want to demand for.
And Fitch is projecting that Ghana's debt will hit approximately 75% of GDP in 2024. What do you make of this projection, and do you see a way out of this?
Basically, it's already going through that trajectory. Right now, it's around 34%. So even before 2024, if you are not careful, if you are not able to manage our debt properly, then it will go above that based on the research we have done. the way out right now is to look at where the expenses is going, how you're going to manage costs. One of the major reasons why they are going for the road show is to get the money for the vaccine. Now, the government can try to leverage on the international relation. You have a strategic way to leverage on it and have discussions with their donor partners and talk to them and let them know that we are in a very difficult situation. If we can use our relationships with you to get this vaccine, why not? And maybe over a period of time, they can get a rebate or pay over a period of time instead of going for a loan and pay in cash. You understand? So basically, the debt is going up, and I'm sure it's going to be above what is pitched as projected. So basically, that's what it is right now.
All right, Alavi, thank you so much for your time, and do enjoy your weekend.
Thank you, too. Have a good weekend.
Thank you. And the African Development Bank will launch its 2021 African Economic Outlook today by 2 p.m. Greenwich Mean Time with the aim of examining Africa's growth performance and outlook, and presents the socioeconomic impact of the COVID-19 pandemic. The launch of the report with a theme from debt resolution to growth, the road ahead for Africa, will be attended by the AFDB President Akinwumi Adesina, Nobel laureate Professor Joseph Stiglitz, government ministers and governors of the bank, and representatives of the diplomatic corps, researchers and industry experts. Africa is projected to recover in 2021 from its worst economic recession in half a century, but the continent still faces significant challenges related to COVID-19 vaccinations and debt burdens. According to the bank, one of the most significant consequences of COVID-19 pandemic has been a rise in the borrowing needs of African governments to cover expenditures induced by the health crises. And French Development Agency, a development finance institution 100% held by French government, says it is investing 2 billion euros in Nigeria. According to the AFD country director in Nigeria, the 2 billion euros was set aside to be spent on mainly road financing, water sector, improvement in electricity and agriculture. He explains that 300 million euros is being spent on the Abuja electricity backup, a project in collaboration with Transmission Company of Nigeria to improve electricity of the nation's capital, while 200 million euros is for the Northwest electricity backup. On agriculture, he says vocational training is currently being held across the nation to improve the skills of Nigerians, as the finance institution intends to earmark 50 million euros to fund agriculture projects in 5 states, which include Benue, Imo, and 3 other states. And South Africa has been ranked the highest food security secure out of 28 countries in sub-Saharan Africa, despite an overall decline in food security. According to the latest Global Food Security Index report produced by the Economics Intelligence Unit, South Africa's global ranking fell from 67 to 69 out of 113 countries. The lack of food safety net programs or effective food safety net has been the main driver of this decrease, as well as increasing the cost of food. Overall food affordability deteriorated, partly due to food price inflation and loss of income due to the pandemic, or the COVID-19 pandemic, which has exposed existing vulnerabilities in the global food system, is likely to exacerbate the food needs. And that's a wrap on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.